I think there's so many differing views around the property market at the moment in that we're going through a 1 in 100 year event. And look, there's certainly lots of modelling around to sort of say what may or may not happen, but I think one thing that's very, very hard to predict is how consumers are actually going to respond to what's going on in the marketplace. Now, one thing that we don't really know is how consumer behaviours actually change through this time. So in terms of the overseas holiday or the purchase of the new car, are they as important as they once were, or has life become that little bit more simple and it's all around home and family? You know, the security of the home, it's almost like that cocoon of safety when you come home. So has that actually changed the way in which people will look at the market? One of those things that's very, very hard to model in terms of how it may play out, and I think only time will tell. Look, I'm not sure there's actually that right time to be able to enter a market. You could be waiting a very long time for everything to line up. I think what's most important is that people are really comfortable in their own zone, in their own circumstances, rather than relying on what other people are saying. So once people are comfortable, I think that's the right time to purchase. We're certainly seeing a lot more come out in the media about it being more difficult to obtain a home loan in the current environment. What we're actually seeing is the way that lenders are asking a few more questions around the regularity of income and even shading income around certain sources. So things such as bonuses or overtime, they may now take a lower percentage than what they were before. We're also seeing a final check of income just prior to settlement, and that's something that we certainly haven't seen before. Look, all these changes are certainly not doom and gloom. These changes mean it's a little bit more confusing for our customer to be able to navigate on their own. So being there to be able to support them on that journey, and particularly through times of uncertainty, there's never been a better time for us to cement the importance of that relationship with our customers ongoing. There's certainly nothing new about interest rates remaining low, and earlier this month we saw the Reserve Bank hold at 0.25%, and that was a move that was widely expected. We're seeing interest rates with lenders remain low, and most of our customers being able to obtain an interest rate of anywhere between 2 and low 3%. What's changed is there's much more commentary now around how long interest rates are going to remain low. What we're seeing is a number of economists predicting anywhere between 2 and 3 years for the cash rate to remain at that 0.25%. That's great news for anybody looking to get into the market or who is already in the market and looking for a better deal.